An OnlyFans model, if they came to me and said, I want to get a boob job, can I put that through my tax return? And I'd be like, let me call HMRC and find out. HMRC doesn't care what you put through your business. Like, couldn't give a fuck. It's why you've put it through your business that matters.
How can I pay myself or withdraw money from the business in the most tax efficient way possible?
So I'm going to tell you how you can extract like up to about 100 grand, like most tax efficiently from your company. Step one, you pay yourself a small salary of £12,570. Next is you pay yourself a dividend. At this point, you have paid yourself an income of £50,270. You should consider, instead of cash extraction, you consider wealth growth. So what I mean by this is,
if you run a small business and the finance side still feels like something you'd rather not think about, this one's worth your time. It covers how to pay yourself properly, the allowances most people don't even know exist, and why your accountant's fees will probably pay for itself.
so tune in if you want to find out how to absolutely minimise your tax bills to HMRC.
Today I'm talking to Faye, who is my accountant and also my friend, and we had a lovely conversation. There's loads of actionable tips for you and your finance, and we had a great chat. I hope you like it. Whatever you're doing, maybe you're at the gym, maybe you're on a walk, maybe you're working, I hope you can listen, enjoy and learn a bit. And if you enjoy it, let me know. Give me a message, give me a comment, a follow, something like that. Engage, say hi. Thank you. Enjoy. Faye.
Hey!
Who are you? Who are you, and why should people listen to this episode?
I am a chartered accountant. I've been working in the industry for about 10 years now. I started my own practice back in 2024 because I wanted to do accounting differently. I support small business owners, entrepreneurs and creatives, helping them actually understand their numbers and not feel intimidated by them. And I think people should listen to this episode if they want to feel more confident in their business finances, if they want to get motivated to get shit done. And also I'm going to be spilling some trade secrets. So tune in if you want to find out how to absolutely minimise your tax bills to HMRC.
I love that. What a cool intro. I love that. Okay, so you mentioned about being intimidated and feeling more confident. What practical advice can you give people, business owners, to feel more confident with their money in the new financial year?
So I guess I have 3 to 4 top tips on how to sort of feel more confident and more on top of things. And my first one is to actually learn how to read a set of financial statements. So that's your income statement, your balance sheet, a cash flow statement if you have it as well, and all the supporting notes behind those. Because I think if a business owner can look at those and actually tell the story behind those numbers to explain, our revenue moved by this much because of this reason, or admin expenses were so much higher because we really put cash into marketing, which then increased revenue, but then we had to acquire assets to keep up with the demand. So we had to go to the bank to get a loan. That's why the creditors is higher. To actually be able to analyze and pick apart your own numbers and be on top of exactly the story that they're telling, not only does that empower you to understand what's been going on in your business, but also other users of the financial statement. So if you are seeking external investment, or if you're wanting to go to the bank for a loan, you're able to tell them exactly what's what and what's happened.
If all of that sounds foreign and people aren't used to doing that, how do they get into learning this? Like, where would you find a lot of this stuff? Especially if they maybe don't have an accountant, that's something that you would do.
Yeah, definitely. I mean, for my clients, if they want to know more, I take them out for a coffee, and then we'd have like a one-to-one sort of accounting, finance, basic session just to go through everything. And I always like to, when I produce financial statements for people, take them through it step by step and sort of point to things that they know that has happened in the year, be like, that's how it's translated. And I suppose taking that a step further, I would always recommend is understanding the basics of double entry. Now, double entry is the foundation of what I do. It's literally all I think about. But to be able to understand how your business decisions are actually going to translate in those numbers and affect those numbers, I think increases anyone's ability to create like a really informed decision, especially when they are sort of focused on presenting those numbers in a particular way.
What does that mean? Double entry?
Double entry. So that is all your debits and credits. So every single transaction that happens in a business, you have one side and you have the other. So if you acquire an asset, that requires paying out cash. So there's always like something to come with another thing. So every single thing that you do, whether that's buy a train ticket, it comes with two entries. So you have the expense and you have the cash, or you have the liability, etc.
Yeah.
So to just there's plenty of videos on YouTube that like teach you. DEDCLIC is like the acronym that is used to understand what's a debit and what's a credit. But just to take the time and invest your time into actually sort of trying to understand the basics. I think if you went to do a business degree at university, accounting is a module that you would come across because it is so valuable, although it's not fun necessarily. But once it's ingrained into your system, you are able to add value to your businesses in ways that you probably couldn't before.
And you said you had a few tips. What other tips would you give to people to feel more confident with their finances?
I guess the thing that I see most in what I do is someone needs to know and keep on top of the sort of three numbers within their business. And that is, for one, your runway, like how much cash do you have to keep going? I think this is particularly important in like product-based businesses, managing cash flow and understanding how much you have, what's going to be coming up in the coming weeks, and what needs to happen to make sure that you don't run out of cash. I think to manage cash flow is such like a key thing in all businesses, but as I said, like a product-based business, when costs and income are like together, whereas it's like a service-based business, your time is the expense more so. So that's one. I also think, and I know this is quite soon into the podcast, but to mention the T word, which is tax, and to actually put money aside in advance of when you're going to have to pay your tax bill, because that deadline creeps up on you. And yes, it's filed by a certain date, but it also needs to be paid by a certain date. And if you have been seeing that cash in your bank account and been spending it as if it's all yours, basically, that you're ignoring any liabilities that you have, you run the risk of coming to that deadline and not having enough cash to pay your tax bill. So to even, I know most online banking platforms now, you can set up pots to split up your money. So to have a separate pot, like I have one for corporation tax, and just I track every month like where my profit's at and try and forecast where my corporation bill is going to be at the end of the year. And I make sure that pot is updated regularly.
Yeah. That sounds good. I have a similar thing on mine, and
good to know.
Yeah. If you're, I don't know, thinking about your runway and how much money you have and how much tax you've got to pay, is it best to do it within the banking app itself, or have a separate like spreadsheet? What's a good way of monitoring it and therefore like actioning anything you learn from it?
I think the number one best way, and I know it's not always possible, but is to check your numbers every single week, is to go into your accounting system, run the P&L and see what that profit line is going to be. And if you're not doing that every week, at least do it every month and make sure everything's up to date, because then you'll be able to see exactly where you're at. And then based on the profit that you've earned then, you can calculate roughly how much corporation tax you're going to do. So for most companies, it's going to be between 20 and 25%, or corporation tax is between 20 and 25%, depending on the size of your business. So if you're putting in 25% of your profit that is in your bank account at that current time into a separate pot, then yeah, you'll be absolutely fine. A lot of businesses, say you got paid a deposit up front and you're like a really in-demand business, so people pay like 6 months in advance to guarantee your services in 6 months' time. Even that cash sat in your bank account, you should be putting that aside, or at least clocking that it's not yours to spend yet until you have performed that service and it's yours to do what you want with. Because when it comes to recognizing revenue in the business, you have to accrue and defer things based on whether it's actually happened yet. So you could be being paid up in advance. I know for me, for instance, the clients that I work with on a regular basis, I just have them pay me a regular amount. So it's almost like I'm a subscription service to them. But that's including things like producing financial statements for their financial year. I get to the end of my financial year, I haven't actually done their financial statements yet because their year end hasn't happened. And that amount of cash that I've got from them for that proportion of my service, I have to put aside because I haven't done the work to actually say I've earned that cash yet. So even things like that, depending on your business model, it is always good to think about.
And when you were talking about tax earlier, so what do you have any interesting or just actionable tips for things that are tax deductible that people maybe aren't considering? And I think sometimes I am prone to putting fewer things through the business because I'm cautious that maybe something isn't tax deductible and I'm wary. What things can people or should people put through? And do you have any maybe like interesting things that people are maybe missing out on?
So the crux of it is HMRC doesn't care what you put through your business. Like, couldn't give a fuck. It's why you've put it through your business that matters. So, and this is why expenses matter so much, because you're taxed on your profit. So that's your income less expenses is your profit. And that number there is what you're taxed on. Income, it sort of is what it is. You've generated that amount of money from the services or products that you've been selling to customers. There's not really a lot that you can do when it comes to reviewing what is most tax efficient. So with expenses, it is super important to make sure that you've included everything to maximize every single allowance and expense that you've got. So that's why you employ someone like me, because I'm able to think of these on the spot, whereas most people will be like cautious and not think that, oh, I don't know whether I can put my new phone or my AirPods through my business because, yeah. So I suppose the most interesting thing that I've come across is an OnlyFans model. If they came to me and said, I want to get a boob job, can I put that through my tax return? And I'd be like, let me call HMRC and find out. Because whereas an expense needs to be wholly and exclusively for your business, there is an exception when you can prove that that thing is going to increase the amount of income that you can generate. Mm-hmm. So if that person, if she can prove that getting this boob job is going to increase her subscription and she's going to be generating more income for that, HMRC can't say no to that. It has been done. Like, sex workers put boob jobs through all the time.
Okay, that's cool. That's cool. And you say you phoned HMRC. Is it just not a standard, yes, you can? And if it is something obscure, you said you have to like prove it.
Yeah.
And also, if you had to contact them, do you have to say, this is how much money I expect to make, this is what will happen? Or do you have to kind of say, this is what has happened as a result, so therefore I'm going to put that through the business? Like if you're going to do something obscure like a boob job, how would you go about it practically?
So you can either ask them before if it is a thing that you will not be getting, if you won't be getting the tax relief from it. But it can be retrospectively afterwards. Obviously, there's a little bit more risk there if they turn around and say no. But with, I don't know, I wouldn't know how much it costs. It's like $9,000 a boob. I don't know. It's probably going to stick out as something that's quite significant that's happened in like your P&L. I don't know. I don't even know if you'd capitalise it. Can boobs be assets? I don't know. But it will stick out as something that might be queried. And to sort of preempt that it might be queried, you call them up, or even when you're filing, like attach anything that you have that proves that you did generate more income as a result of the, like, say you could even put a survey out there to your subscribers to be like, would you be like, stick around and pay like 5% more or 10% more on your subscription if I got a boob job, yes or no?
Do you know, that's a lot like Elon Musk does that kind of stuff, and lots of companies do this waiting list model. So they'll launch a waiting list, get signups. I think the most notorious one is Elon Musk's with the Roadster, I think, or Cybertruck. I can't remember which one it was, but they asked for like $5,000 up front,
Right.
and it's been 8 years. Just had it there, and I guess it's like evidence that the investment, people want it, it's desirable. There's demand. Yeah, and I guess 100%. It's like,
I mean, it doesn't need to be a black and white thing. Like, although I am an accountant, I do get quite creative when it comes to presenting data and gathering all of that. And I think of all the nuances that could actually impact a real life scenario and present it in a way that a HMRC consultant can understand. But yeah, I mean, we're using that example. I hope he's taken that $5,000 deposit and put it in a separate pot, because that's not his to spend. But yeah, I mean, I'm up for anything like that. And there's so many other expenses that people don't know about, particularly like the allowances that companies can use. So,
ladies and gentlemen, I'm sorry to interrupt your listening pleasure with a brief advert. I just wanted to remind you that this podcast was produced by Maskew Media. And if you want a podcast, if you want some videos making, some content, things like that, get in contact by visiting www.maskew.media. Enjoy the rest of the episode.
Like recently, we had Christmas. I had a Christmas party of my company. My company is just myself at the moment. So me and my boyfriend, we went out for a lovely dinner and then went to the pantomime. And it was less than £150 a head, which is like the annual entertainment allowance for your employees.
And that can just be tax.
Yeah, that's a business expense. It reduces your profit, reduces corporation tax. Another great thing is that directors, as shareholder directors, definitely need to make the most of is the trivial benefit allowance. So the trivial benefit allowance is an allowance that basically allows you to gift yourself things from your company. And it doesn't have to be business related at all, as long as it's less than £50 a pop. It's not cash or a voucher. It's not directly related to your performance or as in your contract as like remuneration. And it's less than £300 a year in total. Then you can just gift yourself things. A great example, I mean, I've got one of these ring things, but you know, the Whoop.
Yes. What is that? The one that tracks your sleep and energy and things like that?
Exactly. Yeah. So for
Aura, is it Aura?
This isn't an Aura. This is an Ultra Human ring.
Okay.
Because I didn't like the Aura business model of the subscription. But
fair enough.
In hindsight, I should have got a Whoop, and I'll tell you why. A Whoop, you don't ever pay for the watch itself.
Yes.
It's just a subscription basis.
Mm-hmm. Yeah, the watch is usually free. I think you can get some attachments to make, like pay extra for the watch, but you pay for the app, don't you? Pay for the health benefits and the watch comes free.
Exactly. And most of the subscription plans that they have are less than £300 a year. The monthly amount that you be paying is less than £50. So if you wanted a Whoop, put it through your company, because it's completely legit. And the trivial benefit allowance is something that all directors should have on their checklist to be like, have I made the most of this before the end of this tax year? It's something that should be monitored.
Trivial benefit. And then you said like an entertainment allowance for parties is like $150 a head. Is that per employee that you have, or like directors, or?
Per employee and plus ones. So you can invite significant others to that thing.
And the plus ones get 150 as well. So you get £300 per person almost.
Almost, yeah. But someone who is single doesn't get the benefit of having 300 quid spent on them.
Okay.
But the conditions are, it needs to be available to all employees. It needs to be an annual thing, and it can only be like a one-time thing. You can't split the cost between like a summer party and a winter party. It has to be something that you put on for your employees every single year. And yeah, £150 a head is the guidelines.
I don't think many big companies or small take advantage of that, because I didn't even know that was a thing, to be honest.
Oh, and that's my fault as your accountant for not letting you know. I apologise.
And are there any other like obscure ways that people can save tax? They can put through obscure things. They can have parties. They can put through things like their Whoop. Are there any other things that you think people maybe don't know about that they could save money on, or they could buy that could go through the business that they wouldn't have otherwise thought of, do you think?
I mean, the most universal thing is the home office expenses. So if you work from home on a regular basis, like I do, you do as well, you can claim a portion of all of like your home utility bills, Wi-Fi, phone, mortgage interest, water, gas, electricity. You can take a portion of that based on how often you work and how many rooms you work in the house, and how many rooms your house has. And put that through a business, because you as an individual pay for this house that this company operates from. So this company should be paying you, the homeowner, like subsidize the expense of actually running that company from that property. So that one is like universally, everyone who works from home should consider that. HMRC do have, if you don't want to dig out all of your statements and actually work out the exact number of all your bills for the whole financial year, they have bands of like allowances as a guide on what you can recharge your company. So I think it's up to like £35 a month from memory. So that's another one that's quite universal. Phone as well. Did I say phone? I think
so I have my phone in my own personal name, although it's majority used for, it's a phone,
Well, a proportion of that can go to your business.
How do you work out what the proportion is? Is it just like?
It is literally like a finger in the air, best guess that's reasonable.
Okay.
That you can do that, because it's not something that you can prove.
No, it's hard.
But you have to be objective and honest about what you're doing. And then, that's 100% something that you can put through your business. I mean, you got a new phone, finally.
I know, and I didn't
recently.
Do it. I didn't think about it.
You didn't? Oh.
No, I should. In fact, I bought the phone, the Google Pixel 9, because it had a nice camera, and I wanted to record videos for my social media on it.
Yeah. I'm in an hurry about getting a new phone myself for that very reason as well. And although there is like the business personal element that you have to think about, but yeah, definitely it's something that I use for business primarily. So
I think it's probably like 50-50 or 60-40 for like business to personal. And can I do it retrospectively?
100%, yeah.
Do I have to like move the payment over to a different bank account and then it?
Yeah, so if it's something that you paid for personally, and even as a director or employee of your company, if you bought something, say like a train ticket, and you put it through your personal account, but it was for business travel, you just reimburse yourself as long as you keep the receipts and all of the evidence. It doesn't have to be paid from that bank account immediately. Like, for instance, I bought myself a lovely mechanical keyboard, and I, at the time, didn't even think to put it through my business. So I was like, oh, wait, actually. And so I just recharged myself for that thing. So, yeah.
That's cool. So how can I pay myself or withdraw money from the business in the most tax efficient way possible?
So the interesting stuff. You need to get off a notes app or like pen and paper if you've got it, because I'm going to be like spitting out some numbers. So I'm going to tell you how you can extract like up to about 100 grand, like most tax efficiently from your company. Step 1, you pay yourself a small salary of £12,570. So this utilises your personal allowance and keeps national insurance to an absolute minimum. So you won't be paying any income tax on this. Next is you pay yourself a dividend if dividend is available in your company. I'll caveat that in a bit. But you pay yourself a dividend up to, but not within, the higher earning tax bracket. So that first £500 of dividend will be completely tax-free, making use of the dividends allowance. And the rest of that dividend will be taxed at 10.75%. So this has gone up by 2% since the last tax year. So it was 8.75, it's now 10.75. At this point, you have paid yourself an income of £50,270. Now, if you needed the cash, as in you wanted it in your pocket to go spend, keep paying yourself a dividend, but then the dividend rate jumps up to 35.75%. So it's quite a big jump, which is why you should consider, instead of cash extraction, you consider wealth growth. So what I mean by this is consider your pension. So as an employer of yourself, you can contribute into your pension up to £60,000 completely tax-free. And this 60 grand is completely deductible. It reduces your profit by 60 grand and therefore reduces any corporation tax. And similarly, if you want to start investing into an ISA, you can contribute up to 20 grand tax year into an ISA. Again, completely tax-free. And then next, you want to start thinking about any sort of lifestyle benefits. So whether you want a private medical, private dental scheme paid by the company, gym membership paid by the company, all of that stuff. So anything that can be subsidized through the company is just another way that you can draw down money from there. But I will caveat, as I said before, dividend, because people talk about dividend all the time, and particularly with new businesses, when you are incurring losses, if you are incurring losses in like the first couple of years, you cannot extract a dividend until you have a pot of retained profits that's in the black. So if you've been making losses, that pot is in the red until you start generating a profit and it tips over. And as soon as that is positive, that positive number is what you can pay yourself a dividend as. Scary word, but it's illegal to pay yourself a dividend. So in that case, if cash flow allows, obviously all of this is if cash flow allows. I wish I had 60 grand to pay into my pension if I wanted to. But yeah, if cash flow allows, like pay yourself that way. And if you don't have dividend, just increase your salary. You will be paying income tax on that salary, but it means you're still getting paid. And that is ultimately the most tax efficient way for you to get paid if dividend isn't available to you. So yeah, that is my top tip and trade secrets, and something that I like to speak to every single client about. They're always like, how do I pay myself? And sort of panic a bit, but that is the formula that stays true in this new tax year as well.
That's really cool. Really concise and useful. And you mentioned as well the like gym memberships and I don't know, appointments, dentists and things like that. I don't put any of that through the business. Is that similar to what you were talking about earlier? Like there's a percentage of, like the gym, for example, I was going to the gym prior to having a business and I would continue after, during, it doesn't matter. So I wouldn't even think that a gym membership could go through the business, or similar, like going to the opticians or dentists, things like that. How does that work?
So with anything that's like a private medical scheme or benefit scheme paid by a company, you as an employer have to pay employers' national insurance on that, because it's if like you value that benefit as if it's cash that you're paying someone as a salary. So the employer would pay national insurance on that. The employee would pay a small amount of income tax on the benefit, but it's never a huge amount. Similarly, if you had a company car that you had for personal use, you'd pay a tax on that benefit. Yeah. But it's just another thing to think about that enhances your lifestyle. That is something that reduces your profit, that reduces your tax ultimately.
So there might be lots of people who are listening to this that have been doing their own tax for a while, whether that's their own self-assessment for themselves or their business. At what point would you say that it's good for a person to seek an accountant to take over that rather than trying to do it themselves?
I mean, the work that I do for people is I do it for them because it is not something that will generate cash in the business for, say, yourself, who your time goes into like earning income. So I think people feel often very overwhelmed and daunted by having to like have that task like in the back of their head, and it's always on the to-do list that you need to do certain things, or you need to like update your zero, or review your P&L and move money about, whatever it is. I think the tasks themselves people tend to loathe and I love. So to engage someone like me, it basically frees up your time, frees up your headspace to do exactly what you do best in your business, and just chuck all the admin my way. There's peace of mind knowing that all of this stuff's being taken care of. My bills often pay for themselves with the tax savings that I can give people with my experience and expertise in what they can and can't put through their business. And I think when people start feeling overwhelmed, or even before they get to that point, and if cash flow allows, obviously, I think a guide on how much you should be paying for an accountant is like up to 5% of your turnover. That's roughly like if you had an internal finance function in your company, you sort of measure the cost of that finance function against your turnover. It's roughly about 5%. So that's like, in terms of thinking, can I afford this? Is this reasonable? You should calculate it like that. But I mean, yeah, I don't know if you can speak on behalf of yourself as someone who's engaged an accountant. Like, it's not something that you want to think about having to do all of this stuff, which is why I like to take that burden off people. Yeah. And you trust that it's being looked after, or at least I hope.
Yeah, 100%.
I hope you do.
It's of all of the, there's lots of different parts of the business which are difficult. And
yeah.
The more time I spend in business, with my own business and with other business owners, the more I learn, and then the scarier it is and the bigger it is. And the one thing that always remains is that I don't like finance. Anything to do with that, I don't enjoy. And I want to get, more familiar and more confident with it, but having that burden removed is nice. And I remember talking to you when I wanted to start my business, and it was one of the things that encouraged me to start, because moving. Now, I don't know who's listening to this. It might be people who are very established in their business, might be people who are similar to me a couple of years into their business, or it might be somebody who is thinking about starting the business. Mm-hmm. But when I was in that thinking about stage, I didn't know how to transition from employed to owning a business.
Yeah.
And I think for me, the part that was the scariest is knowing what to do with your tax and the company responsibilities and the legality of it. I think that's a bit scary. And I think it's nice, like working with you and for other people, just accountants broadly, to take away that burden, that stress, so then they can focus on making money and enjoying the business.
100%. I mean, it's so easy to declare yourself as self-employed. Like, it's literally, I don't know, like 5 clicks away, and you say, yeah, I'm self-employed, I earn an income, I need to do all this stuff now. There is no guidance from that point on actually what to do and how to do it, and what is tax, and how much am I going to have to pay, and how do I like manage all of this. There is no guidance in that yet. It's a 5-click process to actually set up yourself, like create a company which has all these filing deadlines. And I really want to change that in terms of making all of this information public knowledge and not gatekeep anything, because I think the more ignorant people are, the easier it is for, and I'll come on to this because before I start ranting, the easier it is for government and legislation to make changes and then not be like an uproar, because be like, oh, actually, that's going to really affect me because I know how this works now. And that change there equals this, and I don't know whether I'm going to be able to pay myself next month now. So to actually be there with the knowledge and to share that knowledge and just give people peace of mind that they're doing everything right. They're not going to have like a knock at the door and someone being like, you're under arrest because you did this wrong in your government
you can just
gateway.
Remove it. You don't have to think about it. I mean, you think about it enough, like you still engage with it, but you don't stress about it.
Yeah, exactly. And I think it's so important. And even like talking to kids about money and for tax and learning about tax to be on the school curriculum, I think there's such a knowledge gap that doesn't need to be there. I think people are very daunted by the concept of tax, paying your tax and filing everything correctly, whereas in fact, it doesn't need to be that complicated at all.
You spoke about legislation and changes. And we're recording this, of course, in the first quarter of 2026. How has tax, accountancy, how has business changed, and how will it look moving forward into 26, 27, beyond?
Yeah, I mean, we had the autumn budget, which, I mean, firstly, from the get-go, completely appalled and frustrated. And I actually ended up turning it off halfway through because of the laughing and the jeering and just like the lack of regard of what the Chancellor was actually saying in this like hearing, and exactly the millions of people that are trying to listen in to understand how it was going to affect them. Want to get that off my chest on the get-go, that I think the budget should be read in complete silence for the sake of me being able to actually hear what they're saying to then feed back to my clients on how it's going to affect them. But I think generally it's not favourable at all to small business owners. We've already touched upon the increase in dividends tax, which is, on paper you can tell how that affects people. But the other thing is that people might not initially consider, especially if you're not a small business owner, just to understand the economic circumstances around this, but the increase in national living wage very much plays into the same trend of when we saw the increase in employees' national insurance in the previous tax year. I think as a result of that increase in national insurance, I think 16,000 businesses had to close because of that alone. Like they just couldn't keep up with the costs because that was such a steep increase as well. And the increase in national living wage, I mean, it looks like it's great. It's wrapped up in a bow and that's amazing. But even employing young people, I think the wage increased by 8%. The amount that a business owner will suffer, I don't think will be contraed by the benefit of that young person in receiving the wage, because they've got to pay national insurance on that and also and everything. And it's the small business owners who are employing young people. They're not the people in boardrooms approving themselves £1,000 of bonuses before moving on to the next company they have their fingers in. It is the local guy, like who owns a shop on your high street. It is the person and the family that you buy carrots and eggs from at the farmer's market. It is like the core of communities that are being deeply impacted by this, and the government is just not rooting for them at the moment. And sorry, the big sister in me is getting very protective over my clients. But yeah, it's not a good time. It's a very challenging time, particularly for people who employ young people. A lot of people are going to be losing their jobs because these people can't actually afford to employ them anymore. It puts a lot of strain on small businesses. And I think if you have the means to, I will always say shop local, like shop independent. As convenient as the big corporations and whatnot are, they're there to be convenient. If you have the means to financially, always shop independent, shop local to support these people who are trying to navigate this storm right now.
If there are fewer people being employed because the salary or their living wage has gone up, plus, I think with AI, depending on the industry, has made it so that lots of people, especially people going from university into the workforce for the first time, it's really hard to find a job. It's really hard to find somebody that wants to employ you because a lot of the learning is expensive for an employer, and a lot of that could be, in the early days, just replaced with AI, unless you're doing something specific, unless you're doing something physical and things like that, of course. But I think that with AI, I think it makes it hard for people to get into work. Yeah, it's hard.
Yeah, 100%. And I think the public perception of what a business owner looks like is really misinterpreted. Yeah, it's all screwed up. But
they have a negative stigma, I think, business owners.
Yeah, because I absolutely adore what I do because I get to work with people who have made passions and interests and hobbies into a means to make a living. And it's a modest living 9 times out of 10. They're not like stealing your money. They're not paying their employees tuppence. Like most of the time, they are paying themselves last. They meet customer demands. You're paying your suppliers, you're paying your employees, then you pay yourself with what's left over, if there is means to, like obviously if cash flow allows. But people always don't prioritize themselves. And I've had stern words with clients who aren't doing that. They put everyone else before themselves, and they're not rewarding themselves for the hard work that they're putting in. And I always try and help them prioritize how to make that work, like how to manage cash flows, how to like delegate certain things, just firstly to make their like way of life easier. Like I always try and get people to, as lovely as money and earning a decent income is, the quality of life and mental health is also so important. So if you're up to your eyeballs in stress all the time, there is something wrong there. Not necessarily like a finance thing, but in terms of business function and processes, how can that be improved? Because they work so hard and they don't always get the reward that they deserve for it. I'm always a strong advocate for them.
I love it. So the last question I want to ask is, we spoke about lots of different things, but if you were to summarize in a sentence, 2 sentences, or in few words as possible, what advice would you give somebody who is a business owner and looking to save money or organize their finances better? What would you tell them to do as a priority? If you could summarize this conversation.
So, main thing is to not hide away from it. You need to look at your numbers and be completely transparent with yourself where you're at and how your business is performing. So that is step 1. And I know that's the obvious thing, but it's easier said than done a lot of the time. So I just want to make that one obvious. Second thing is to make sure you have a complete financial review and business audit, at least within the final quarter of your financial year. So that involves understanding or trying to forecast where your profits are going to land, calculate roughly what corporation tax you're going to have to pay, and put that money aside, because that money on your cash is due to HMRC. It's not yours to spend. And then towards the end of your financial year as well, you want to look at yourself as a shareholder director. Have you paid yourself at least £500 of dividends if retained earnings allowed? Because that allowance will be wasted if you do not make the use of it. So that's within the tax year. Think about any assets that you want to invest in. The timing of say you've earned you've had a great year, profits really big, and you're thinking or considering buying a certain new asset or equipment. Consider whether you should be timing that and planning cash flow for that within this financial year in order to offset or use capital allowances to offset that big profit of yours, and actually just plan in advance on where things are going to land in order to make the most out of it, because there's a limited amount of things you can do in hindsight. So to stay on top of things is absolutely key.
Thank you, Faye.
Cool. Thanks so much for having me.
Thank you very much for coming on. Thank you.
Congrats on the podcast.